we're covering sole proprietorship basics and Schedule C for the Enrolled Agent Part 2 exam. A sole proprietorship is the simplest form of business. It's an unincorporated business owned and run by one individual. For federal income tax purposes, it is not a separate legal entity from its owner. This means it's a disregarded entity, and its income and expenses are reported on the owner's personal tax return. The exam will test your understanding of this flow-through taxation. You won't find a separate tax return for a sole proprietorship. Instead, all business activities are reported on Schedule C, Profit or Loss from Business, which is filed with the owner's Form 1040. The net profit or loss calculated on Schedule C is then carried over to Schedule 1 and becomes part of the taxpayer's adjusted gross income. A classic exam question might present a scenario where a freelance graphic designer receives several Form 1099 NECs. You would need to know that all of this income is reported in Part 1 of Schedule C. But the exam loves to test what is and what isn't a deductible business expense in Part 2. To be deductible, an expense must be both ordinary and necessary for the business. For example, the cost of design software is deductible, but the cost of the designer's personal home internet, used only occasionally for work, would likely not be fully deductible without a specific home office allocation. A common exam trap is the deductibility of the owner's salary or health insurance premiums on Schedule C. Wages paid to the business owner are considered a draw and are not deductible. Self-employed health insurance premiums are not deducted on Schedule C either. Instead, they are an adjustment to income on Schedule 1. Another area the exam focuses on is the distinction between a business and a hobby. If an activity consistently generates losses, the IRS may reclassify it as a hobby, which severely limits the deductibility of expenses. You might see a question about a taxpayer who has reported losses on Schedule C for 5 consecutive years. This is a major red flag for the IRS. Remember the